everybody. My name is Numan, I'm co-founder of ZKX. It's an absolute pleasure to really come over here and present. I can see some of our existing investors over here as well. Quick summary at ZKX. So guys, at ZKX, we're actually building a perpetual swap protocol like never before. The idea for ZKX was very simple. We are venture capitalists as a background. We were one of the most early investors. Our previous fund was the only investor in BitMEX. That's where we really got a taste of the perpetual swap as a product, how sticky it is, how big it can really be. But we also had very core understanding of emerging markets, and we saw an opportunity where we felt that there's a gap in the market for a perpetual swap protocol that is able to perform at par with centralized exchanges, targeting retail users with a Web2 experience, but still having the best of DeFi. And that's how the story of ZKX really started off. So very early on, we realized that mainstream adoption of DEXs was always a problem. So we thought we could either build something for 15 to 20,000 hardcore DeFi traders, or you could build something for the millions of traders of centralized exchanges with the same user experience. Decentralization was really becoming quite a key driver early on, especially after FTX. The adoption has been quite strong, something that we as an industry were not really able to do. Maybe a failure kind of led to the largest adoption in general. We were also seeing that most of the on-chain solutions available at the time weren't scalable. They weren't able to perform and give the user experience that a retail person, especially in emerging market, is very comfortable with. And that is where we saw majority of the opportunity kind of coming in. So that's the majority problem that we saw. Next slide, please. Awesome. So what we created at ZKX, we created a unified liquidity perpetual DEX. What it means that essentially we started building ZKX on top of Starknet. Why? Because to make this vision a reality, account abstraction was extremely important for us. At the time, Starknet was pretty much the only protocol, only ecosystem that actually had tried and tested technology and account abstraction, which we could trust. We went for it. We were one of the earliest projects on Starknet, but the vision for ZKX was always omni-chain, accessible to everybody everywhere. We essentially created, so ZKX essentially bridges the gap between centralized exchanges and DeFi by bringing the best of both worlds. In very simple words, the infrastructure for ZKX is divided into two large components. We created our own ZKX app chain, which is essentially pretty much a standalone blockchain of its own with its own block explorer and everything. On top of the app chain sits our order book. However, the safety security of the funds is always in the self-custody wallets within the L2. The L2 being Starknet for now, but eventually we'll be rolling out to the other ecosystems as well as they progress and grow, which gives us this beautiful architecture that gives us the best of both worlds. We're able to achieve extremely high TPS, 75,000 transactions per second, which can not only support high frequency, but also ultra high frequency trading. It gives us very easy accessibility in terms of having our own data provider service, which sits on our blockchain, which pulls in data directly from the centralized exchanges, which means there's no latency in data, sub-second refresh data feeds. And you have something which eradicates any sort of arbitrage opportunities that might have been created because of delay in data within ecosystem DEXs that use oracles. On top of that, this infrastructure gives us the ability to have very simple and fast integrations with market makers, liquidity providers via basic APIs. So you have the kind of integration that comes in with basically anything which sits on top of our app chain. But the beauty of this unified liquidity order book is that because this sits on top of the app chain, you have one order book where users from multiple chains can trade against each other. For the first time in a DEX, you have an order book that, just like a centralized exchange, where a user from Starknet can trade against a user from Polygon, can trade against somebody who came in off-chain, together in a single unified liquidity order book, which makes market making extremely, extremely capital efficient, and also gives us the ability, because we're pulling in data directly from the exchanges, to have an offering of perpetual swaps that is unlike anybody else. Thank you. Next slide, please. Awesome. So in the journey of ZKX, we realized that it's not just about the experience or the infrastructure. It's also important to figure out other core components. Governance, for example, was something that we realized that we need to really look at it from a very different perspective. In a typical governance model, the token holder pretty much was the person who was getting most of the staking rewards, most of the governance of the protocol decisions. But the problem was that in majority of cases, the largest token holders are the earliest investors, who typically might not be the people who actually use the protocol. So why should the revenue, rewards, and the governance of a protocol be in the hands of somebody who just put in their money years ago but don't actually actively use it. That's when we came up with the idea of liquid governance, which means that whenever you stake ZKX tokens or you trade on ZKX, you accrue ZKX digital shares, which are basically soul-bound tokens, but they have decay built in them. What it means that till the time you're staked or you're constantly trading and you have these ZKX digital shares, only then will you receive the USDC staking rewards from the protocol, as well as be able to participate in the governance of the protocol. The moment you stop trading or you unstake, the SBTs kind of dissolve away, and essentially you don't have anything. So the protocol governance is made for people who actively engage. But that wasn't really everything. We also realized that we need to solve for other important aspects, be able to provide the kind of experience for all market participants. And I'll go into two components over here, both for retail and institutional. I'll cover the institutional bit first. We realized that majority of the problem in protocols was that you would see a lot of large liquidity, hundreds of millions of dollars of trading volume, but you have like 20 active accounts, which means it's just one-sided toxic liquidity where market makers are just running the funds around and just reaping rewards. In order to create a very healthy order book, you need avenues from both sides. For the institutions, we realized that we need to solve for what is their core problem, and that was liquidity. So we solved it in two cases. A, the ZKX staking rewards are basically 30% of the exchange's trading fee and 10% of the exchange's liquidations, which means anybody who's a staker gets access to these USDC rewards. And we really took them from the real world. Just like you have shares, the company makes money, you get dividends. Why should staking be any different? If a protocol makes a lot of money, we should be able to share the same USDC that we're making with our stakers, which can be institutional or retail, really.
Please note, you have 1 minute left.
Yes, that was the most important thing. Moving on quickly. Yes, the biggest differentiator in ZKX is the unique trading experience. We realize there are two kinds of traders, but not everybody would like to use the traditional trading terminal, which we also have. We created the gamified trading experience, which is the first of its kind. You take single positions, you get rewarded for participation, which means top profits, top loss, top volume. We engage risk taking, and we're launching this next week, 30th of January. It's going to be quite a milestone launch. We also have other social components as well that you will see once the product is launched. Happy to answer more questions. Moving on. This is our traditional trading terminal, which is basically something that's available everywhere, just a better version of that. Moving on, please. And I would say last, actually, we've covered all of this. Let's just move on again. Perfect. One back, just one slide reverse. Yeah, perfect. This is the current scope that we have in terms of community, everything organic. We did our testnet with $1.14 billion in trading volume, 50,000 accounts created on Starknet. The token is going to be launched in the next few months. We already have in principle listing approvals from all the exchanges apart from OKX and Binance, which we expect to get the moment we launch mainnet within the next week. I'd like to go to the last slide, which is the investors and current backers. Perfect. So as you can see, we have a volume of very interesting and strong investors that have supported us since the beginning. Right now, we've already closed about $6 million. We had opened a strategic round, which we has already oversubscribed, but we are still taking some soft commits from the right people who could help us grow and expand. And that is a lot of from the community. So thank you everybody who's already supported us, who's in the audience. And yep, that's about ZKX. Happy to answer more questions. Unfortunately, there's a lot to talk about than I could really cover in 5 minutes, but thank you for the opportunity.
Absolutely. Thank you for the top-notch showcase. And yeah, it's quite a challenge to compress all in 5 minutes.
Yes.
So let's see if we have any questions coming up from our panel of judges. None yet. However, I do have a few burning questions from my side.
Please.
Let me see. So there are quite some upcoming L2s with ZK rollup solutions. What is your key decision to build on Starknet?
I think when we started building this, Starknet was the only one that had tried and tested technology. As you can understand, whenever you're working with anything which is fringe or really at the periphery of new technology, you would take a decision going with somebody who was already a tried and tested tech. Starknet, when we started working with Starkware, they already had StarkX, so Immutable X, DYDX, large working projects, large capital was already there. The trust factor was high. They were extremely supportive. And eventually they also became our investors. So we've already had great support with them. Yes, working in Cairo was quite tricky, but then we created a bit of we hired from basically Web 2, early Web 3, trained our resources. And the good thing of all of this training has been negligible churn in the company for 2.5 years. So I think we got the best of both worlds over there.
Amazing. Gotta say, I'm quite bullish on Starknet, so looking forward to see your launch. I see we have one question coming up from Kevin. I'm bringing you on the stage now. Hey there,
Perfect.
Kevin.
Hey there.
Hey, Kevin.
Could you please give us a little introduction, which company you represent, and definitely feel free to cast your question.
Of course, of course. So I'm the co-founder of MetaBros. MetaBros is an incubator. We have worked on launches like AIT, PAL AI, Inspect. Now we are working on EC and a couple others. We focus primarily on marketing, go-to-market strategies. That being said, I would love to learn more about your go-to-market strategy and how you plan to onboard your next millions of users.
100%. Great question. The core genesis of ZKX was you need to build something. So let me be very clear. We are not builders building for builders. We are actually venture capitalists who understand growth and end user and wanted to build something with the best of tech for the end user. In our case, our target end user is some of the most active emerging markets within Asia, Africa, India. The reason being that historically, also, if you look at trading, if you look at volumes, majority of the volume comes from over here. Now, in order to really penetrate into these emerging markets, the biggest thing that we need to understand is basically regional language support. All of ZKX's content is currently available in 11 languages. All of our entire trading engine will also be available in 11 regional languages. So you're bypassing the barriers of the English speaking only community, but yet having a Web2 sort of user experience. We have our own account, which means your user journey starts with ZKX account, which is a self-custody L2 wallet. We have our own native bridge from Ethereum L1 to Starknet L2, which means if I count our partners on ramping like BankSignAll and Layer Zero, which is our cross-chain partner, fundamentally in one click, you can have your money or your funds credited from any ecosystem or your card directly into Starknet L2. Everything happens behind the hood. Everything has already been stress tested by Nethermind, and we're working very closely with Starkware as well. So we feel that by bringing this sort of seamless experience, where you abstract away everything to the end user, it's a password, it's an account, self-custody, but everything's happening in the back end. Your accounts get credited, your money gets credited on Starknet L2. But for them, and the reality is for the end user, it does not matter whether I'm on Starknet, whether I'm on Polygon, Mantle, wherever. It should be technology that they can trust, that works seamlessly, and is in line with the principles of DeFi. So regional language expansion, having a Web2 experience, eradicating everything Web3, making it seamless behind the hood, like the experience these users are used to, is the way we're actually looking at this.
Okay, it makes a lot of sense. So mainly lowering the threshold of language barriers, make it a seamless experience, low threshold to use this.
100%.
One more question is, given that you've already tackled these issues, what would be your biggest issue in onboarding the users, and what are your thoughts on that? Like, what would be your biggest obstacle if you look at it right now from what you have not covered yet?
Sure. So something that a lot of people ask me, which surprisingly nobody asked me, is that you guys are building on top of Starknet, but Starknet doesn't have any TVL or users. How do you counter that? And my answer always is the same, because since Genesis, we realized that we don't want to be dependent on any ecosystem. Yes, we are building on top of them, but ZKX does not rely on Starknet or any ecosystem for its users. We build the entire infrastructure stack in a way that we have the ability to pull in users and be a money Lego to any ecosystem rather than depending on their users or TVL to bring value to us. So the approach is extremely different on how we've really tackled this. I think something else that is very important is when you demystify a lot of Web3 components for keeping in mind a Web2 user. I'll take an example of staking deviating from the topic, but I think it's very important to understand this. The reason it's been simplified and made like that, and the way the infrastructure is built, in the future with Banxa, we can even create something like fiat staking. So with your credit card, you can stake because ZKX account is your unified experience into ZKX. You can start getting USDC over there. And that is very important and big, because when I talk about staking to an end retail user in Indonesia or India or somewhere, they don't understand the two token economics. It's very simple for them. You trade on us, we make money, you get returns out of it because you trust us and support us. And I think keeping in line with this simple ethos of demystifying and breaking everything down so it's understandable to your user is the core key to success, which is very rare in DeFi because most people don't understand this basic, which is a very hardcore rule of Web 2, really. So I think everything is in line with that.
Okay.
Thank you for elaborating on it. Kelvin, thank you so much for your questions. We have a few more questions coming up for other judges. So, yeah, see you around. Let's go to the question of Alex Kovanchko, CEO of Aurora. His question is, what are the requirements for app chains besides the 75K transaction per second?
I think the most important thing is that within our app chain, it's basically a custom implementation of Rust. Uh, and let me be clear, it's not to be confused with the Starknet app chain, which is their native app chain as a service that they've launched. We have built actually our entire stack, but because it is Rust based, it will be future compatible with all the upcoming, sort of side chains, app chains, L3s, whatever you want to call it. The most important thing about the app chain is so how it's really working. Your funds and everything is within the safety of the L2s. Your order book sits on the app chain. We basically have a mirrored trading account that mirrors the balances on the app chain. The app chain has its own block explorer. So fundamentally, whenever order matching is happening on the app chain, it is instantaneous. And the beauty is that it's not a black box. So you as a user can actually see that there's no front running at what price the orders matched and everything. All of these proofs are then whatever you make or lose, the balances are basically adjusted by rebalancing it on the L2 wallets. So you get very high frequency trading. You get, even if the chains are slow, it won't impact your trading experience. But yet your funds are always safe within the L2s. The app chain currently, so we also have stage by stage decentralization for the app chain as well as the ZKX DAO, which will happen in the current stages. We're going to be starting with basically close partners because if there's any sort of upgrade or something that we need to do, it's much easier to do it in stage one, and then eventually opening it up for external validators and to the community to be run validators for this. And it's a step-by-step process, but it's also free gasless trading, so it's actually economically quite viable, extremely fast, and yet giving you the safety that you've always wanted.
Many thanks for clarifying. I believe Ivan has also a question. Please join us. If you do, of course.
Hello, I have a question on behalf of our community because they always asking this question about do you plan any incentivization programs? And if we see on the market there are a huge amount of these programs, so how can you be specific in this case?
So yes, two things over here. Number one, what we're launching with, which is the gamified trading terminal, over and above whatever position or whatever alpha you make over there, we are giving locked ZKX token rewards for the first 2-3 months till we actually launch our token. So that is the number one incentivization program. Over and above whatever alpha you make, you will get locked ZKX tokens based on the performance, based on your position in the leaderboard. The other thing that we created for a constant incentivization program on the trading side was something called the high tide. The high tide algorithm is basically a reward distribution mechanism that takes into account top market, top traders, total number of traders in a market, and top P&L. And basis that, it could distribute any ERC token rewards to any market, which means, to give you an example, let's say if there's a new perp or new token that's launched in the market that gets listed as a perp on ZKX, basis to incentivize trading on that perp, that project can actually allocate some ERC20 tokens that we can load onto the high tide that can be distributed. We are already giving ZKX tokens as reward, but it also means that anything ERC20 stable coins I can load in there and incentivize trading on anything, which means that from a community perspective, it's an extremely gamified and engaging way for performance, social performance, and overall individual performance from a P&L perspective in any market. The other thing we have, and something we haven't made public, is we do have the usual volume contracts that we generally make, which is incentives basis volume and discounts. We did not want to make it public right now because we don't want just mercenary liquidity coming in, which means liquidity from very large market makers who would basically come in, grab the volumes, run the wheels, and basically take up most of it. And that is why we don't want to make it public as of now. We want everybody to have a very fair chance. But like most exchanges, yes, there would be some volume-based added benefits that we will be showcasing in the near future as we launch. But I'd like to keep some of them as a bit of a secret over there.
Okay, thanks. It makes sense. So if you one day decided to make some insights, so you're welcome to make an AMA on our channel. So
After launch, I'd love to do that. I can share a lot more, trust me. And when you see this thing, this is the a kind of trading experience you've never had. I can assure you that.
okay, thank you.
Sounds great. Namam, also thank you. We're out of time. Looking forward to see you develop further and have a great day.
Thank you so much, everyone.